Good afternoon, everybody, and welcome to this edition of Global Leadership Studio. Hi, my name is Kapil Bahal, and I am the sector lead for banking and financial. And on behalf of Amity Institute of Training and Development and the entire global Amity universe, I welcome you all to this edition of Global Leadership Studio. In the last one quarter, we have noticed that the entire globe has been gripped by a pandemic that we commonly know as COVID-19 or Corona. There are multiple questions which are coming in our mind right now. We are seeing so many, so many developed countries crumbling under the stress caused by COVID-19 or Corona. We are seeing so many economies crumbling under the pressure of this coronavirus. There are so many questions which are coming to mind right now. What will happen to the financial market? What will happen to the job market? How will our global economies and our local respective country economies come back on the trail, come back on the right path? There are so many questions. What about hospitality industry? What about tourism industry? What about aviation? What will happen to the future of these industries? We need answers for all these questions. And today, to help us get some answers, we are joined by a very distinguished leader from the banking industry. We are extremely delighted to have Mr. Sriram Krishnan with us today as the esteemed speaker today. Mr. Sriram Krishnan brings on board more than 2 decades of experience in the banking industry. And in his current role, he is the managing director and the co-head of the global transaction banking business with Deutsche Bank. Along with that, he also heads the Securities Services business for India. Prior to his stint with Deutsche Bank, Mr. Sriram held very senior positions with Citibank, with HSBC, with Franklin Templeton, and Stockholding Corporation of India Limited. We are extremely delighted to have you with us today, sir, and we look forward to getting ourselves enriched with your wisdom, your guidance. You can share your views with us as to what we can expect, not only from India's perspective, but what we can expect from a global perspective, how the economy is going to move in the post-COVID era that we are looking at. Now, before I hand over the proceedings to Mr. Sriram to share his thoughts with us, I would like to advise all my participants that in case you have any questions for Sriram, I'm sure you would have a lot of questions for Sriram. So the way we are going to do is we will first listen to Mr. Sriram Krishnan's talk, what he's going to share with us, and post that we will have an open Q&A session with him. The way you are going to access Q&A, if you notice on the screen on the right hand side, you see a panel, you see a command bar, you see a small red arrow right at the top. If you click on the arrow, you see different options. You see the audio, the webcam, attendees, then you see the chat option, and under chat you also have the Q&A option. So either through the chat option or the Q&A option, you click on this diagonal box, type in your text, and send it across. So those questions will be coming to me, and I will be asking those questions to Mr. Sriram. So that's the process that we are going to follow for the session today. So, sir, without any further ado, I request you to please enlighten us with your thoughts and your opinion on what's happening in the global level right now. Thank you so much, sir.
Thank you, Kapil, for your kind introduction. It was indeed, it's indeed my pleasure and privilege to be with you all today and to share my thoughts on how we see COVID-19 and the way forward. I'd like to begin with a story that I read about 2-3 weeks back. This story is about a place called Choluteca. This is a small town in the country called Honduras. And I think it's the 7th largest town or city, whatever you call it. And in 1930, Choluteca had a bridge. that was built. And this bridge was rebuilt in 1996. At that time, a fine bunch of architects was brought in, and they wanted to build a bridge which will withstand the most difficult hurricane. And the best architectural minds came together and built this bridge. And sure enough, in 1998, Hurricane Mitch destroyed Honduras. Large scale destruction of the nth order. But this bridge, the Choluteca Bridge, survived Hurricane Mitch. It was a truly phenomenal architectural achievement of the highest degree. And obviously people were thrilled. But there was just one problem. You know, the bridge was like this and the river was beneath the bridge. The hurricane had shifted the river away in all its fury. And so the bridge is left standing today. If you go to the internet and look up Choluteca, Honduras, you'll get those images. It's really funny. So the bridge has no use whatsoever. Think about it. Isn't it remarkable how things can change and how quickly they can change? Knowing fully well that a hurricane will hit Honduras, it's just a matter of time. Even so, the designers of that bridge couldn't accurately anticipate potential future conditions. So here we are today, gathered to anticipate potential future conditions in the aftermath of COVID-19 to see what it has in store for us and what we need to do today. This is because successful innovation is also about correctly predicting how markets and behaviors will change. And in the process, how these changes can invalidate certain previous assumptions. COVID-19 is probably the biggest black swan event of this century. Even countries and cities with superior health infrastructure are struggling to cope with COVID-19. Germany is perhaps the one country that has dealt with COVID-19 very, very well, but then they had a very superior health infrastructure. But a lot of other countries, if you look around, are struggling with issues ranging from availability of testing kits to what is the right quantum of testing that one should undertake, availability of medical equipments, PPE kits, hospital beds, ICU beds, oxygen, availability of frontline medical personnel, etc. So let's examine some of the key headlines in terms of changes in behavior that we can already see in front of our eyes in the current circumstances. Probably that will be a good starting point. So if you look at headline changes, the first headline change that I want to speak about is the change in the consumer behavior. If you look at consumer behavior during the pandemic and post the lockdown, we can already make out certain changes. So the first question that is always being spoken about these days is, will savings dampen consumption? Will people start spending or not? Or will they just keep it aside for a rainy day? That in itself is a big change in behavior. We were not like that before the crisis. Secondly, there is a distinct preference to shop online, and nobody wants to go to the brick and mortar shops anymore. So there is a big fear of catching the infection, and so everything has become online. If you look at the reports, the data seems to suggest that this year the volume of e-commerce transactions in India would be about 26% more than what it was last year. And the CAGR that is being estimated for the period 2019 to 2023 is about 20% for e-commerce transactions. So already there is a change, perceptible change in the way people are conducting their transactions. Even if you look at the US, the current year's volume of e-commerce transactions is already about 22% higher than what it was last year. We are all seeing the impact on travel. Tourism is expecting in India to make a loss of 1.25 trillion rupees this year. Also, there is a distinct preference for two-wheelers. I saw a report the other day which seems to suggest that two-wheeler production is almost back to about 70% levels. That's because a lot of people are feeling more comfortable and safer in two-wheelers where they are by themselves than going in a taxi or in any other mode of transport. So that's another distinct change. Also, people don't want to eat out anymore, but they're okay to pick up packed food or home order the food provided they have the certain level of comfort with the delivery service. People also aren't wanting to go out and see any movies. They want to see movies at home. And so you see new movies are getting released on the OTT platforms. In the UK, it has been reported that 21% of the consumers have increased bank balances because they just have reduced their shopping significantly. Either they have not gone to the shops or they don't feel the need to do so. Everyone's keeping the money aside for the rainy day. There's also change in the industry behavior during this time. If you look at industry behavior, the fundamental question that comes to our mind is, will the industries completely recover? And clear no in all cases. Of course, some of the industries and sectors might be back to normalcy, but then there are some others who have to make certain amendments and changes. And then there are yet others who have been born during the crisis. Already a $2 billion industry in just a matter of 8 to 10 weeks time. So these are the new opportunities that also come by during such a crisis. Cost models are being reviewed by many industries. A lot of organizations are speaking about working from home more going forward because that will help reduce the cost on commercial real estate. Also, corporate treasuries are beginning to review their lending arrangements and define target leverage with larger safety cushions. Supply chains are being reviewed globally. So all of this points to a distinct set of outcomes that we must carefully monitor, based on which we can decide what actions we need to take. The third change in behavior is around the digital push. Everyone and everything is going digital these days. Obviously, during the lockdown, all of us were working from home. Some of us continue to work from home, even though the lockdown is slowly coming to an end in some way or the other. During the lockdown, obviously, people had no other choice but to undertake all communication online, shopping online. So cashless payments are on the rise. Digital currencies are in demand. Even relationships are less in person and more through the video mode, like how we are interacting today. So all of these are significant changes from an overall standpoint. Let's look at the impact of COVID-19 on the world economy and also on various countries. And of course, we'll also come to India. If you look at the World Bank report, which was just published a few days back, world economy is expected to degrow by about 5.2% in 2020. The US economy is expected to degrow by about 6.1%, Eurozone by 9.1%, and India by about 3.2%. This is the World Bank report. Of course, there are different economists, different estimates, and the numbers might vary. The scale and size might vary marginally, but we all by and large agree that this is a year in which economies are going to shrink, not grow. Now, let's look at some of the countries and how they've been impacted. Let's start from the US. The US obviously has a big crisis on the table, which is the crisis around jobs. It's estimated that about 56 million people are or have already lost their jobs. And that's a big one for the economy to deal with. Also, 33 million people have filed for unemployment benefits. Unemployment rate apparently is almost 20% or thereabouts. And the number of people who have tested positive, that seems to be increasing all the time. So a V-shaped recovery seems very challenging even for the US. Look at the European Union. The World Bank report says European Union is also going through a tough time and predicts a huge amount of job losses. Again, it's estimated that about 59 million people will lose their jobs. Then let's look at Germany. Germany is perhaps one of the best countries when it came to dealing with COVID. They have great health infrastructure. They did an amazing job in terms of putting money into the hands of people at the right time, helping small businesses. Also, their levels of testing were very, very high, and they continued to treat people who had tested positive. So I think Germany was probably an example in the entire crisis. They had great laboratories. They had solid research going on in terms of finding a solution to deal with this virus. And the only two parameters where they were probably struggling was one on exports, where clearly exports are dwindling this year, and it's expected that there would be a 11.5, 12% drop in exports for Germany. And in terms of unemployment, it's estimated at about 5%. Still, that's very, very reasonable if you look at it in a comparative measure with the other countries. Look at what's happening in the United Kingdom. Again, they've been hard hit. They took a very different approach. Initially, they thought there's no need to shut the economy and people will simply develop, the necessary level of immunity. They called it herd immunity. Unfortunately, the strategy backfired, and then they had to go into lockdown. Their education sector is the hardest hit, and most of the international students have cancelled their enrollments. So there's a 90% reduction in output. Construction industry in the UK has been significantly hit, apparently 70% down compared to last year. Factory output is down about 55%. Travel has been impacted, and that's not good news because they also have a significant chunk of revenue coming from travel and tourism. Look at China. What's happening in China? China is probably one of the street smart countries when it came to dealing with the crisis. They managed to restrict the crisis or the spread of the virus significantly. The virus never went beyond Wuhan and Shanghai, for example, or Beijing, never impacted by this virus at all. And in terms of their challenges are around the aviation industry, which has been badly hit, and the real estate industry, which has also been significantly dented. But they managed to be very, very clever when it came to mass manufacturing masks and other protective equipment and supplying these to the rest of the world, particularly to the European countries, which badly needed these during the peak of the crisis. China has also smartly captured a bigger share of the steel demand in the world this year. So last year they had a 54% market share of the steel output. And this year they are expected to have about 62% market share in steel. So that's very, very clever of them to capitalize on the small window of opportunity. Let's look at South Korea, one of the best countries when it came to dealing with this crisis without shutting down the economy, without going into lockdown, unlike many other countries. South Korea went into rampant testing mode. Still, they couldn't protect their large revenue contributors. One is, of course, the automobile industry. For them, Hyundai and Kia Motors put together have suffered an 84% drop in revenues. Also, Samsung, who make memory chips, they've seen a roughly 20% dip in the revenues. Jobs are getting hit because they are an export-oriented country, and unemployment rate in South Korea is about 4.5%. Then look at a couple of other countries which are also interesting: Australia and New Zealand. Australia is, obviously heavily dependent on tourism, just like New Zealand. Australia also has a lot of international students, particularly from China, coming into Australia for studying. A lot of those obviously cancelled, and that led to an impact. And obviously, they realized that travel was a challenge, and they were trying their best to increase domestic travel. New Zealand, for example, they have in fact, decided or in the process of deciding to have a 4-day work week so that more people will travel, at least domestically, if not internationally, and that can also help the economy during these times. Australia and New Zealand are also talking about a travel bubble among their two countries, given that those people are, relatively not so badly impacted with the coronavirus. They think that if there is a pact for people from either country to visit the other for tourism purposes, then that will help both those countries, which is a very smart thing to do in these times. In terms of action taken, the rest of the countries obviously, have tried various means to ramp up the expenses. Plus, the central banks of the world have increased the liquidity significantly. Those are the large steps, and of course, the big announcements, including from the government of India on the massive package, etc. That has happened in every country. Now let's come to India. And before I get into what the impact is in India on various sectors, we'll probably take a couple of minutes to just understand how COVID-19 is different from the global financial crisis from an India standpoint. If you look at the global financial crisis of 2008, India was not directly impacted. India was impacted indirectly on the rebound. And at that time, India was obviously very, very robust as an economy. We had very low levels of non-performing assets, maybe 2 to 3% NPAs. And by and large, the economy was in reasonably good shape. So we were obviously much, much better placed to deal with that crisis. However, if you look at the moment in time when the COVID crisis hit India, at that time, I think in comparison, the Indian economy was on a slightly weaker footing. I'm saying this because in the last couple of years, while the banking system is being steadily cleaned of the non-performing assets, we've had a non-banking finance company problem. So the banking and NBFC sectors are both relatively weaker today. And not just the banking and the NBFCs, but the housing finance companies, the microfinance companies, the system is a little bit impacted at this time. As per data available in the market, the level of NPAs in the banking system are about 9.3% of advances. And I think recently the RBI made a statement in one of the announcements that this could very well be about 10.5, 11% now, because the 9.3% was as of September last year. If you look at the NBFCs, again, the data suggests that there's about 6.3% of the advances, which were probably NPAs. 6.3 looks a little bit on the lower side. So if you collectively look at it, we're talking about 15 to 20% of the assets having gone bad, which is a huge number in comparison to what it was in 2008. So the challenge for us during this time has been the fact that we haven't created, we haven't created that magical output that we always thought we would, unfortunate for a variety of reasons. The demographic advantage, which is so significant for India, given that we have a very large young population and that can speak English as well fluently, this was expected to fetch bigger dividends than what we have actually seen in reality. So job creation is one area where we have some work to do still. Now coming to the impact of COVID-19 on India, if you look at various sectors, take textiles and apparel, for example, I think they are looking to make, they will end up with losses of about 13 to 14,000 crores this year. Take aviation. At minimum, it is estimated that they will make about 25,000 crores of losses because travel has been badly impacted during this time. Take roads and highways. The developers and toll operators are expected to make a loss of about 3,500 to 3,700 crores every quarter. Take real estate, infrastructure, and construction segments, right? There are infrastructure projects to the extent of 59 lakh crore rupees, which have got impacted because of the lockdown. And obviously, we will have to revive those projects and find a way of finishing them. Take steel and mines, for example. The demand for steel and mines has come down, steel and metals has come down, and it's estimated that the dip in demand would be about 13 to 15% or so. And that means there's too much inventory piled up, and unless manufacturing activity picks up and things get back on track, this segment is going to be again struggling. Take petrol and diesel. Diesel is expected to degrow for sure. The demand is expected to come down by about 8 to 13%, anywhere between that range. And in the case of petrol, hopefully it will pick up the demand for petrol, because the lockdown is coming to an end in most parts of the country, and people are slowly coming back to work and so on. So the growth in demand for petrol is expected to be between 5 and 12%. Take healthcare. We will be fine in healthcare. Unfortunately, there is a bit of dependency on China, because we import a lot of stuff from China in that space. So that's the one area where we could have been okay, but for this dependency. Had we not been dependent, it would have been brilliant. Telecom is probably the one sector which technically is not impacted at all by this crisis, but then they have the old problem of the 90,000 crores, past dues that creates uncertainty for that sector. Power has been always a challenge. The distribution companies are state managed. They've never been able to do a foolproof job. The leakages are costing every year, and this year, because of COVID, another 20,000 crores of losses are estimated. And then look at chemicals, that space is struggling. So if you look at it, the key sectors which are badly hit are banking, NBFC, power, and then there are certain sectors like apparel, textiles, which have a large number of jobs, and MSME, of course. And then there are certain sectors which are very badly impacted and are going to take time, like tourism, hospitality, entertainment, gems and jewelry, and so on. So some of these sectors like building and construction, for example, they also give jobs to another 250 ancillary industries. So, there's a lot of impact, colossal damage during this crisis. Now let's come to the big themes for India, and what and how can we come out of this. If you look at what's good in India today, I think compared to, let's say, 10 years back or 15 years back, we have better infrastructure, we have better airports, we have better, facilities like metros and better infrastructure overall. We have Wi-Fi, we have all kinds of things. We also have relatively lesser poverty. We have greater financial inclusion. We have some key measures reforms which have got done. For example, GST, IBC, etc. And investors, particularly the foreign investors, they like to see the democracy-based, set up in India. There are suitable checks and balances, which gives them a lot of comfort. Also, India has been a preferred investment destination now for more than 25 years. And there's been always that comfort in terms of repayment of principal. India has had a great track record. Government bonds are looked at as hugely attractive because of that aspect. The track record is impeccable. And the recent reaffirmation of S&P that there's no change in our rating is a big comfort during these times. So what does India badly need to come out of this rut? India needs two things, amongst others, if I have to just pick two. One is India needs to have robust demand back in place. We need people to consume what is made in India. We need, vocal for local to come true. And today, while people might say, because the crisis is still lurking around and not fully gone, I think it's a matter of time. The festive season is around the corner, and hopefully people will start spending. Even if we start taking vacations within India and not travel abroad, for example, even things like that can make a big difference. And India, secondly, needs, apart from robust demand, India needs robust investment flows. And when I say investment flows, it's not just the domestic investment flows, but also the foreign investment flows. And the investment climate, while it might have gone, a little bleak over a period of time, because growth hasn't materialized in the way in which people thought it would, India still remains very attractive. What we need to probably do during this time is, capitalize on what we have seen in the last 2-3 years. Post the demonetization initiative of 2016, we've seen a lot of money come into the financial system in mutual funds, in insurance, and so on. And so I think people need to be encouraged to bring out the gold, bring out all the non-productive assets, convert the land into financial assets, and help the country and help the economy during this time. And I think, the government can also look at options like making land lying with the banks as collateral, making that kind of land work, buy it out and give it to those companies who want to set up in India. So we hear that a lot of companies are looking to move out of China. So it's our chance now to capture those companies, right? So we have to give them land. We have to make it easy for them to come to India, and we have to help foreign investors in every possible way. Also, probably we can take the land from defaulting companies, those who are in various stages of disputes. Take that land out. Government can acquire it under the law, and then make it available to such investors who are going to be here for the long term. So, in terms of key focus items for India, one is, of course, we need to solve the stress in various sectors, whether it's privatization of public sector banks or giving more autonomy to banks, or maybe we should look at creating a bad bank. Maybe we should look at a TARP kind of an initiative like it happened in the US and even in India during the financial crisis. The Prime Minister has spoken about land labor reforms for sure. Law as well needs changes everywhere. Some of these laws are very old and they need revision. Labor reforms have already been announced by some states, so that's exciting. So we need to do a lot of stuff to solve the stress. That's the first and foremost thing for us. And then the second thing for us to do or to focus upon would be to build self-reliance, or the Atmanirbhar Bharat concept that the Prime Minister has spoken about. I think that's a very, very promising one and very strategically perfect initiative to go with. The Confederation of All India Traders, CAIT, has made a statement that they will be able to cut down the deficit with China by about $13 billion by December 2021 by avoiding the import of about 3,000 items, which we are today importing left, right, and center. Do you know our trade deficit with China is in the range of $70 billion. It used to be $2 billion in 2001. So what we import from China, it's hilarious. Everything, starting from plastic, battery, everything is imported from China. But if we were only to be a little bit conscious and aware of this aspect, and if we were to build self-resilience in India, and start consuming Indian. So India for Indians should be the mantra. And if we start doing that, I think this can be easily reversed out. Also, local for vocal, vocal for local rather, is an important theme. We should travel within the country if possible, for instance, and stop importing. Exports can follow later on, but it's important to stop importing, regularize the trade deficits with various countries, reduce it rather, and focus on ease of doing business. India has already made significant strides in the worldwide ranking of countries, and we need to get into the top 20 maybe. It should be very, very easy to operate in India, to set up and do stuff. We should also focus on building a robust healthcare system so that we are able to deal with any such crisis in the future. Focus on education. And last but not least, be innovative to whatever extent we can. I will just talk about one website which we bumped into. It's called covidinnovations.com. If you go to that site, you will find that there are 900 plus innovations which are already listed. These are all innovations that have come up during the COVID crisis worldwide. And you can go through sector wise and see what innovations are there for us today to capitalize on. I can't see why we cannot, latch on to innovative ideas. This is the time when we can make the change, and this is the time when we will find the support that we want to make these changes. One last bit before I wind up is on the shape of the recovery. The shape of the recovery can be V-shaped, but for a V-shaped recovery, we need to do a lot of testing. We need to make people very safe, feel very comfortable returning back to the office. The government has to protect jobs. Government has to protect small businesses and do a lot of things in order to get the economy back on track very, very quickly. It looks challenging for us to achieve a V-shaped recovery now. Will it be U-shaped? U-shaped would take a much longer time to recover. Probably 2021 is when a U-shaped recovery will deliver. That also is arguable. Probably we will be a W-shaped recovery. That's what I think, where we will recover, but then we will have one more dip because I can see the number of cases again going up as we start to open up. So that's the unfortunate part about the recovery process. I just hope that we don't turn into an L-shaped recovery, which will be very long and very painful. Japan went through it in the 90s, and we all know how they are languishing even now. So, in terms of return to office protocols, for example, when people start coming back to the office, I see many organizations, they are making a list of people who are willing to come back to the office, and then they're doing some engineering around it. If we do that, I think we will never be able to achieve a V or even a W-shaped recovery. What we need today is innovation in order to help us make the right decisions. So the innovation has to be around where is the employee coming from. If he or she is coming from a containment zone, then we don't want that person coming to the office because the others are not so safe then. So that's the kind of intelligent software that we should be probably using in order to achieve a faster recovery, from this crisis. Innovation can buy us a lot of time during this kind of a recovery process, and during that window of opportunity, the government can support businesses, pump in more money, and already they've announced a lot of measures to boost the supply side. And around the time the festive season comes, hopefully we will see some more announcements from the government to perk up the demand. And if that happens in a timely way, I think we are in a good shape to recover soon. So I'm going to stop there and have back to you, Kapil, for any questions that the audience might have. Thank you.
Well, thank you so very much for that wonderful insight. You pretty much covered the entire globe. The focus was on the global scenario as well as on the Indian scenario. And some of the key things that I, noted down. You spoke about digitization. You spoke about innovation. You spoke about how we, as a country, we need to, support the Prime Minister's call of, being self-reliant or Atmanirbhar. So thank you so very much for that wonderful insights and sharing a lot of insightful data, which I think will help each one of us who are there as part of the session. I've got some questions. With your permission, I'll start asking this question. So this question has come from Ashish and Siddharth. They say that the rally that we are seeing in the markets, despite the weak economy, their question is, will it sustain given the challenges that corporate earnings will take over the next 3 to 4 quarters? And if not, when are we likely to see the next bull run in the market, sir?
Unfortunately, I'm not a markets person, but I will still, try to generally answer this question. I don't have any exposure in the market, so I'm just disclaiming that at the very beginning. I only have a few investments in mutual funds. I don't have any direct stocks at all in my portfolio. So in terms of how I look at it, markets behave based not just on the intrinsic value of the stock, but also are a function of many other aspects, including how global dependency is going to impact us. You see, in the globalized framework, which has been in operation for the last several years, countries of the world have got used to depending on one another in order to find the most efficient way of doing things. So that's why we never blinked an eyelid before importing from China, and before importing things like a small plastic a bowl. We've gone down to that level. We don't even produce a small plastic bowl in India, right? So that's the kind of dependency we've built. Now, if there is sudden information or sudden announcement around what's happening in China, that also tends to affect the stock markets in India to some extent because of this dependency, which has got so complicated over a period of time. Also, there is a concept of hope investing. A lot of people, react to just a factor called hope. For example, if there is a sudden announcement around a vaccine being, invented to deal with this virus, tomorrow you'll find that the markets have completely, gone up like never before, right? And that's because, again, while the fundamental value of the companies has not really changed, there is newfound hope in the markets about growth being possible in the foreseeable future. So there are a number of factors like this, and which is why the markets keep going up or down. As far as I'm concerned, I'm a long-term investor, and I stay put in the market for a very very long time. And when I look at my portfolio after a couple of years, I mean, generally I see that the CAGR has been around 15% or so in India over a period of time in the equities market. So long-term investors don't have to worry too much about the periodical fluctuations. That's how I look at it.
Thank you, sir. Thank you. Thank you for giving a very detailed insight into that question. Next question, which has come, sir, says that what are your views on India emerging as an alternative manufacturing hub as compared to China, given that there is a larger negative sentiment towards China. So, how does the world sees India as an alternative to China? Sir?
So India has always been seen as a good investment destination. There's no doubt about that. Like I mentioned, the fact that we are a democracy, we have our checks and balances. We can't run away with anything. No government can run away with anything in India. There's just too much complexity in the way we operate. So people are much more comfortable with investing in India and setting up in India a manufacturing plant, for example. But what puts them off is the number of approvals, licenses, the number of complexities that they have to deal with. So, luckily, of late, we are seeing some good news on that front. The UP government, for example, has announced that there will be no labor laws. But we have to learn from other countries in this respect. If you look at Bangladesh, for example, you can have 3 shifts in Bangladesh, and the entire textile business that India used to have, a significant chunk of it has moved away to Bangladesh, simply because they have permitted women to work in 3 shifts, whereas we don't. There are labor laws out here. Also, in Bangladesh, for example, if you want to hire someone today and sack the person in 3 months' time, you can. Nobody will stop you from doing that. You can't do that in India. So these are the challenges which investors want to be addressed, and also there has to be a proper quick redressal process in case of any difficulties. So in the past we have probably not been that competitive on some of these aspects with the other countries, but I can see that we're learning and we're changing. So there is hope.
Right, sir. Thank you. A leading question to this, sir, is that does India have the right kind of infrastructure and the human resource capability to support and enable to India to become a next manufacturing hub? What are your views on that, sir?
No, India certainly has a lot of land. India has a lot of people. So land and labor can easily be made available without any difficulty whatsoever. And capital, obviously the manufacturers of the world are ready to pump in the capital and set up the facility out here. So, I mean, some years back, if you see, when the Tatas wanted to move out of West Bengal, and Mr. Narendra Modi was the chief minister of Gujarat, he said, just come here. I'm going to help you in every which way. And I think within a short period of time, within a few months, if I'm not mistaken, they had set up the plant in Gujarat, and they had also manufactured the first car. So if you have the will, you will be able to make it happen, right? So that's the kind of attitude that the whole country needs to demonstrate today if we want to capture the business coming out of China. And I do believe that the government is having discussions with a large number of manufacturers who are looking to shift out of China. So there is every hope for us on huge levels of success this time.
Great to hear those positive sentiments coming from you. Another question which has come, sir, that the Honorable Prime Minister was recently addressing the meeting of Indian Chambers of Commerce, where he was speaking to the industry leaders. And he gave the mantra of 3 Ps, people, planet, and profit, where he was talking about taking the economy from more of command and control mode to plug and play mode. Sir, do you think that we are ready for that kind of a shift, the way we approach our economy? Thank you.
No, we need to get ready for that kind of a shift. I think the Prime Minister's, message is very clear, and he's always been very simple in his use of abbreviations, which are not only catchy but very powerful at the same time. So I think we have to be grateful for the fact that we have a leader who has laid down the blueprint, which if we implement, we are sure to succeed. Now, a lot of it depends on the execution capability, but I do believe that we have very many smart people in this country who can make it happen. So, his job is to lay down the blueprint and help in every other way possible through the policy and through the support needed from his government. Ultimately, it's the industry that has to deliver. So if the industry has some other asks, we should go back and put them down and get them done. But we can't just keep sitting and just talking about it. We have to get into action mode.
That's a fair point, sir. You're talking about everybody taking the ownership and getting into the action mode. Another question which has come, sir, is that the Honorable Supreme Court has asked the Reserve Bank of India and the Finance Ministry to explain on interest on interest. Everybody is talking about 3 months of lifeline given by the banks on credit cards, on loan payments, and some section of the experts feel that this is like giving undue advantage to the banking industry because they are running interest, and now we are talking of interest on interest. So what are your views on that, sir?
No, we have to understand that out of every 100 rupees, there is a CRR requirement, there is an SLR requirement, and there are other costs in the industry, and what we lend out is only the balance, first of all. And out of the balance, given the environment, right, there's a lot of loans going bad, and the level of NPAs, like I was saying, is probably anywhere in the range of 11-12% in the banking industry alone. So it's quite an unfair statement to make, to say that banks have made huge amounts of interests. Banks have also suffered a fair share of the losses. So I wouldn't necessarily agree with that level criticism that's been leveled. On the contrary, I think the moratorium that's been announced, it's a fair one from the point of view of what people are going through. Obviously, this crisis has been very harsh on a large number of small businesses and also the migrant laborers who do not get their salaries and who have nowhere to go, unfortunately. So it's very harsh on a lot of people because they have possibly not got their salaries or wages on the one hand, and still they have to pay their EMIs on the other. So a 3-month moratorium, given that the lockdown itself was 68 days long, and then we are slowly opening up, gives them some respite. But obviously the money has been lent and the interest is due to the bank. So I don't know how that can be seen as unfair. So we'll have to help each other and come out of this. At the end of the day, it's the banking industry that's going to provide the liquidity, that's going to support the government's measures through the guarantees and help the same businesses grow back to their glorious past and get better than that.
Great, sir. Thank you so much. I think we have time for a couple more questions. There are a lot of questions which are coming in, so I'm trying to pick and choose. And maybe once the session gets over, sir, we will consolidate all the questions and share it with you for your
Sure.
opinion on those questions. Thank you. So one of the questions which has come is around the global rating agencies, how they are perceiving India. And very recently, we saw in the newspaper there were, headlines that they have rated, most of the rating agencies have rated India as BB minus, the negative rating that they have given. So, from a long-term perspective, will it not impact the FDI investments and overall, investments that India was otherwise expecting?
So we are at a level of rating where one level below is junk category. That's the level at which we are now across all the three rating agencies, whether it's S&P or Fitch or uh, the third one, ICRA, right? So the problem now for us is we cannot afford to fall below where we are, number one. Because if we do, then certain long-term oriented investors like pension funds, sovereign wealth funds, etc., they and even endowment funds, university funds, these types of investors don't want to invest in junk category bonds, junk category countries, right? So we will have a challenge when it comes to such types of investors and investments from those investors. However, if you look at uh, where we can go from here, I think the only way we can go from here is up, because the credit rating agencies do not downgrade a country straight away. They first talk about the outlook, and then they go ahead with the downgrade after another 6 months. So we roughly have about 1 year on hand, within which time, if the economy recovers from the crisis and starts promising growth as it used to be, we should be back on track, and our rating can even improve in the next couple of years or so. So we have to wait for those things to happen.
Right, sir. Thank you so much. I would take the last question now, given the time constraint that we have. Sir, this question comes from the corporate sector. Very recently, post the COVID thing, we have seen a lot of laborers migrating back to their bases, and people preferring to be in their hometowns and in their base centers. So, do you see the corporate sector? Right now we see the corporate sector setting up their shops in tier 1 and tier 2 cities in India. Do you see a possibility or a trend where the corporate sector would like to move to tier 3, tier 4 cities, and maybe help the economy of those tier 3, tier 4 cities and also the respective states? Your views on that, sir?
See, moving to the tier 3 or tier 4 kind of towns is a tricky decision, and I'll tell you why. Because in those cities or towns, you don't have enough eligible population from the point of view of the corporate. Now, what do I mean by that? Let's say a multinational company, um, let's say in the financial services sector, goes to a tier 3 or a tier 4 town. Then they may not find sufficiently good number of English speaking candidates to service customers, for example. That may be a challenge. However, if the company is a manufacturing company, they may not mind going to a tier 3 or tier 4 town, because they're just going to have a factory probably, and they just need laborers who can work in that factory. So it's a function of how good the infrastructure is in that particular place, and how the licenses and other stuff, is it easy, are there any challenges in terms of access from the nearby port, or how do the raw materials get delivered there, and so on and so forth. So all those things have to get ticked. Then yes, these towns also have the required level of attractiveness about them. But at the moment, my sense is that India's tier 3 and tier 4 towns need to improve. I think the smart city concept that the government had spoken about needs to be implemented, and we need to create about 200 or 250 nice smart cities. Then yes, those cities have a lot of opportunities from this perspective.
Thank you, sir, for sharing your views on that. We still have a lot of questions, but as I said, what we'll do is we'll consolidate all the questions and share it with you. Thank you so very much, sir, for taking out time and talking to us, giving all those wonderful sites. And especially, you You talked about the innovation website where you spoke about 900 ideas already registered. So I think that's going to be a good base for everybody in the corporate sector to take some ideas from. So I think it has been a wonderful, insightful knowledge sharing by you. Thank you so very much. On behalf of the Amity Institute of Training and Development and the entire Amity universe, I thank you so very much for taking out time and talking to us. And also at this stage, I thank all our participants who took time to join us for this session with Sriram. Thank you so very much, sir.
Thank you. I'm really grateful to Amity University for giving me this opportunity. Thank you so much.
Thank you so much, sir. You have a wonderful weekend ahead, and thanks everybody for tuning into this edition of the Leadership Studio. We will look forward to your presence again for the next studio session. Thank you so very much. Bye bye.
Thank you. Bye.